Hey guys, this is Simon with Trade and Perform Coaching doing the trade review for Friday, I guess it was actually Thursday, July 2nd that I'm doing the trade review. I hope everyone's having a very happy 4th for my friends around the world. I hope you're having a relaxing weekend. So want to review how the day unfolded for us and then relate it back to the 3 C's that we follow to get an understanding of how we approach today. So first of all, the 3 C's in trading are clarity, correct, commitment, and composure. Clarity, understanding exactly what your setup is when you're approaching the trade. Commitment, knowing that you'll take the trade when your setup appears. And then composure, knowing that you'll handle yourself well both before, during, and after the trade, mainly by following a preset routine so that you always stay in a learning mode while you are trading. Okay, and there's a couple of tricks to that, but that's the primary focus behind our trading, is to follow those 3 C's. So first of all, let's go through the day. The first thing that we were looking at was a gap up. Gap ups present certain challenges. The first challenge with a gap up is you don't know whether it'll be open drive higher, open drive lower, right? Failed gap, open drive lower, or chop. So we have a couple of things to measure in the first 30 minutes to kind of help us out. So the first thing is, do we actually have an open drive higher or lower? Are there actually 3 bars that come in a sequence like this? 1, 2, 3. First question, right? Next question is the size of the gap. Obviously, this is a relatively small gap. We closed at 2071. We opened at roughly 2074.50. The next question is, are we able to attain half gap and gap fill? Inability to attain half gap is a sign of extreme strength. Inability to close the gap is also a sign of general strength, right? Closing the gap and not getting a responsive buy is a general sign that the market has turned weak. Okay, so the first thing that we were looking for was the gap. We obviously got half gap and gap fill. We obviously got the half gap in the first half hour. We weren't able to get the gap fill. The next question is the size of the rotation in the first 30 minutes. If you look here, the size of a rotation was essentially 2073.50 to a high of about 2076.5. That's 3 points of rotation, guys. If you look in the past couple of weeks, when the rotation in the first half hour has been in excess of 7 or 8 points, we've had a fairly wild, aggressive day through the day, and you can count on very, very fast directional moves. And what I mean by that, by directional moves, is these moves would be 6 or 7 points down, 2 or 3 points up, and then the next leg down. When you open up with a smaller rotation, the first thing you're thinking is chop and potentially balance with an open like this. What does that mean? Even if we don't come in and fill the gap and we remain strong, I would expect the market to have some form of balance through the course of the day. So that form of balance would be, first of all, in balance, we have a day like this. There's 3 types of balance. I'll cover them really quickly. There's simply sideways balance. Let's erase this. There's sideways balance. There's balance with a downside bias, and there's balance with an upside bias. Okay, so if we look at the character of the market, how did it work? Balance, break balance, attempt to move back to the middle. Low, break low, attempt to move to the middle. Low, break low, attempt to move back up into the range. Low, break low, weak attempt to move back into the range, right? And if you'll go through the rest of the day, you'll see that eventually, all the way over here, we did continue to break lows and move back into the middle all the way through. But this had balance qualities to it all the way down versus opening, pushing up, and then having a straight drive down with no counterbalance. The counter rotations were about equal to the legs down. Therefore, it was a balance with a downside bias in the morning. So the next thing that we had is a clue going through this. And again, all this analysis is done in real time in the room. And if you'll look over at NQ when we opened, at NQ, let's get rid of all this stuff. The first big sign that there was an issue was that we opened below Wednesday's high and were unable to get Globex high. Same thing on ES, right? Except, meaning we were unable to get Globex high, but look at the difference. on ES. And it's small nuances like this that give you a true edge and expand your edge in trading. We open above Wednesday's high, we backside test, we make an attempt to push out, but we are unable to get anywhere close to Globex high. That's a problem for me when the market can't push to Globex high. And the other thing that we look for in the room is to both have NQ and ES in sync. NQ tends to lead ES up. In strong markets, NQ tends to lead ES up. We did not have that on Wednesday. As a matter of fact, just the opposite. NQ is pushing down while ES is in balance. So we have a couple of things here that favor the short side. First of all, we don't get an open drive higher. We gapped in balance for the first half hour in a tight range, lack of energy in the market. Item number two that was really flashing warning signs right out of the gate. NQ, inability to get Globex high, already pinned underneath Wednesday's high right out of the gate. NQ tends to need to be functioning well in order to get ES to push higher. We had lack of open drive. We were showing balance, okay? And so with all of those things, then we finally had numbers come out. And right here on this backside test into 2074.25 is in the room where we identified we wanted to be short. This is actually the bar that I identified that we wanted to be short on. And this was our entry at 2074.25 for a move to the downside. We identified 3 key locations on the downside that we wanted to get scales. Our first quick scale, 1 to 2 points down. The next area we wanted to attempt to take a scale on was on this gap fill at 2071 and change, followed by 2070. And then our final targets, if we could get stretches, were to be down here at this 2065, 2064 was the final downside. I wish I didn't move that, but I did. I'll have to go back and find where I had that placed. I believe I had it right here, but I will go back and look in a little bit. And then finally, that 2064 was our final location. Additionally, we had a specific number we were looking for in a large rotation. In this case, we were looking for 10 points on the downside. Now, that's a great trade plan, right? And we called it out. What was the reality of what we actually got? We got our initial scale pretty quickly after our first entry here to the downside. We got our first scale from 2074.25 at roughly 2073. The next scale we were able to get is 2070. And then I made a key trading mistake. I put my stop at 2072. I really wanted it to roll over quicker. See this little whip right here? This little whip on this bar, had I simply kept my stop behind the 5060, I would have been able to ride this all the way down. Here's the 5060 retrace. Was sitting right here at roughly 2073. I put my stop in at 2072. It was a mental error. It got tagged out on the push up, and so I ended up with scales at 2070. Let's just call it 2073, 2070, and then I got stopped on balance at 2072, and a small mental adjustment was made. I put that in my journal notes, and it's very important. The whole purpose behind this is to create a continuity in your trading, learn from your trading errors, and then move forward in life, right? If you get upset, if you get angry because something occurred, and I actually did get angry, but here's how I responded to getting angry when I got stopped out. I went for a walk around the block. A lot of times, traders, when they get frustrated, will turn around and start over-clicking the button. Even on trades where they came out profitably, especially, look, I got tagged out right here on this move up, and it immediately came back down to this 2068 and then pushed down to 2064. That's very, very frustrating. So this falls under 2 areas. First of all, I should have had my stop on my balance. It was already in trailers behind the 5060 retrace, number one. Number two, trades don't always work out the way we want them to. It's the market. It has random qualities to it. The fact of the matter was, it was the only trade I called in the morning. The location was great, and I was able to take profit away from the market. Anytime you take money away from someone else, this is a competition. We're all showing up in the morning. We may be friendly, we may be dressed nicely, we may be gentlemanly or ladylike, but at the end of the day, I'm here to if you're not taking the same trade I am, if you're selling to me or you're buying from me, we're taking the opposite side, right? And I do not view this as a zero-sum game. I view this as competing with the best traders in the world. I made the mistake. I made the mistake not placing the trade right. And what did I need to do? Instead of taking it out in the market, take a step away, go for a walk around, no significant damage, and I walk out with a profit for the day. So the last piece that I want to point out is we were pushing down. What we were looking for in this day, and the pattern that we're looking for on most days, is for the market to open up, push around, then come back around like this. It's very rare to close on the low of the day. We tend to close in either the middle to bottom third of the range. We tend on, and this is in reference to down days. Secondly, why were we looking for balance on this day? Well, if you look at the first half hour, we had a restricted range to begin with, and we have a major piece of news that'll obviously come out Sunday evening with the referendum over in Greece. Whether it matters or not, I have no freaking clue. Doesn't even matter. But the fact of the matter is the market is on hold until we get that little piece of news, and then we'll find something else. But we weren't going to push down. We weren't going to push up. Our thinking was balance for the day. And if you look at the overall picture, let's see if I can get this back here. Look at the overall picture. What do we end up with? We opened up, pushed down, close around, close at the bottom third of the day. We had a healthy rotation lower, spent an extended amount of time trapping people. Now, I did have one trade where I got stopped. I put a stop approximately 1 point. I tried to take this backside test to see if we could get a double bottom here for this push right here, right? But because of the slow nature of the market, you can already see, look at the pace as we're coming down here. And I'll draw it out. Look at the pace as we're coming down. Pace, pace. This is the first time we extend. We really extend out this time, right? We spend almost an hour here versus a half an hour up here. The market's already getting slower. I take a trade into this. I get stopped right here. Now, the concept still was that we would push up, but there are very few people that can enter a trade at 11:30 and wait all the way till 1 o'clock for the push back to the upside, okay? The concept was correct. We certainly didn't want to be shorting down there, and that's why I pretty much withdrew from the field of play and was not calling any trades out. Very, very successful. There's another matrix to look as to whether the market worked, and that's the zones. First time into the zone, successful rotation back up. First time into this, I'm going to have to check that I got this in the right location, but I know that we got a rotation here, and we had planned for 2066 to get a counter rotation back up. The only place that really failed was the test at Globex low. And if you'll notice this blue area on the chart, what this blue area on the chart represents is a poorly auctioned area. This goes to auction market theory. And in a poorly auctioned area, normally what we expect, the pattern in there would be rejection off the top. We got that. Then auction halfway down, push back up, and then rotate all the way through and complete the auction. But the market can also re-auction straight through it, or it can slow grind through this market. What the market chose to do here was slow grind through this area, re-auction the majority of this. Let's see if I can get a whole picture there for us. And we almost, not quite, but we almost re-auctioned this entire area, and then we made the push back up. So normally in a faster, more robust market, we would have expected a U-turn here, then a connection down it. Instead, we just slowly grind through this entire area, spent our time re-auctioning, and then pushed back up. There was one last piece, and that was in the volume profile, and I'm going to see if I can show that to y'all really quickly. Let's use this one here. Okay, I've been pointing out a couple of things. First of all, if you'll notice on the last couple of times, and I'm just going to blow through this and not go through in detail, we responded, this is this 2065 to 2070 area, right? We pushed down into this area and then closed back above in this area, above 2070, and it pushes back towards the top of the range each time. Now, you'll notice we had a significant break of this range, right? This was the range. We had a significant break this time. We have pushed back up, But now look where we're rejecting. We're rejecting just the opposite. Whereas before the market was pushing below, let's erase this. Whereas before the market was pushing below in these two cases and then coming back up for a close, which then trapped sellers and pushed them all the way back up to the top of the range. Now we've closed below, we've come back up for a test, right? And now we're getting rejection back to the downside. So I know right now that I need to close above roughly 2074 in order to start pushing back up into this range. If I do not get on a closing basis, a close above 2074, I can look for lower prices. Conversely, if I close back into this area, I can look for an attempt to push back up. The next piece that's very, very important in here is that really I would deem sellers starting to gain control. Okay, does not mean they've established control, but they're starting to gain control. When we take a Fibonacci tool and we go from swing high, swing low, we are still yet to retest the 50-60. It's going to be imperative that we get above the 50-60, and I got to tell you, I'm waiting for a big, juicy short right there at 2092. When we get up there, that will be gap fill, and I'll imagine if we do extend up, will end up being great trade location for a push back down later on, probably a couple of days later, but we'll look back at that and we'll say, wow, that's going to be really great trade location for a short side trade. That would be my guess. So as of now, we're below critical areas for reversal. We're holding below. We'll see how we do. I'm certain that we'll have some type of gap associated with Greece Sunday evening. And in the meantime, I want you to go through and make sure that you have a couple things. First of all, for success, a written trade plan that gives in detail what your entry, exit, and stop is on your trade. That goes right along with Mark Douglas and what he's always spoken about. I emphasize in my coaching. Pre-planned entry, exit trade reduces anxiety in trading. If you have too high an elevated level of anxiety while you're trading, you cannot learn, and you are thinking with your fight or flight brain instead of your rational brain, and you end up with a lot of why did I do that and losing money. Number two, you keep a careful log of your entries, exits, and stops, and keep track of your MFE and your MAE. Now, I do this differently than FT71 does. What I want to know in my MAE and MFE is how far the trade would have gone against me if I used no stop, and how far it would have gone in my favor without tagging my stop had I never exited the trade. Very important to keep up with it. And then how long the total extension on that trade would have taken, both time to first scale and how long it took to make its last and complete extension, either up or down, whether you're short or long. This will give you a sense of removing you out of your anxiety and instead getting a time frame reference for what's normal over a large cross section of your trades. So that all goes back into clarity. Okay, once you have clarity, you can work on your commitment to the trade, meaning taking the trade properly, taking your pre-planned exits and stops properly, and then your composure. If you can maintain your composure, that means for guys, no shredding yourself, telling yourself how stupid you are. A lot of guys do that. No punching walls, no throwing stuff. Being nice to yourself and recognizing that you're doing the best you can with the tools you have, and that the only way to get better as a trader is to recognize your weaknesses or recognize the knowledge that you don't have and then set about gaining it. Anyways, my name is Simon. I'm with Trade and Perform Coaching. We go through this process every single morning. Anyone who would like to join, simply send me an email to tradeandperform@gmail.com. And I hope everyone has a wonderful, wonderful 4th. It's a very special privilege to be able to trade and make money in a market like we have and have the freedom to do so. So I'm grateful for both all Americans and for people around the world who are blessed enough, and we are living in a time where we can all have the opportunity to make money in the markets. It's not reserved for elitists. Anyways, everyone have a wonderful, wonderful day, and I will see everyone bright and early on Monday. If you'd like to join, please send me an email. If not, make sure you have a written trade plan, you're following the trade plan, stop the boom bust cycle, get consistent. I'll see you later, guys.